Okay, and so in this video, let's go ahead and just talk about keeping it to one time frame and understanding swing structure from that point of view, because multi-time frame analysis is going to come a little bit later on in the course, and I don't want the two concepts and the two topics to get mixed together and blur your understanding of one versus the other by taking on both at the same time. However, it is important to keep in the back of your mind that, like we've kind of seen in some of the break of structure videos, that swing structure is happening on all time frames to form just little breaks of structure on the time frames above it. And so in this example, let's just talk about one time frame and kind of apply what we've already learned to that swing structure on that time frame. And so in this example, let's say hypothetically we're talking about the 5-minute chart, and on the 5-minute chart, we're just going to map a big swing structure and apply everything that we've already learned to this topic. So let's say, for example, price comes down and then we put in a lower low here. Price retraces, comes back, and we start to see a bullish trend form in the market. And it's might be kind of messy because in most pullbacks, usually price action is very messy, forming wicks and liquidity grabs like that. So yeah, just something to keep in mind. And we'll talk about this later on more in depth in the course, but a lot of the times price action can get really nasty when you're trading pullbacks, especially on lower time frames. Like if you were trading this on the 1 minute, pullbacks can get pretty ugly. So yeah, just continuing on with our 5-minute example here, we can then see price start to reverse. And so let's say, for example, we get a change of character here, followed by the following break of structure. And then usually what we'll see is price action swings start to get more aggressive and a little bit more clear as the market reverses. And usually you'll see, after the change of character, usually you'll see 1 or 2 breaks of structure before price actually like breaks free and continues that trend downwards. And so in this example, we can see that a swing structure has formed on, let's say this, for example, this is the 5-minute. If you want to take notes or take screenshots of this, this can be the 5-minute trend. And what do you see? Well, we see a lot of breaks of structure. We see something very similar to the last lessons where we were talking about breaks of structure and how to do structure mapping and everything. We can see something very similar to that forming, where price goes up and then it gets pretty messy and then it starts to turn around and the breaks of structure go the opposite direction and continues on with the overall trend if you were to zoom way out on the chart. Okay, so this would assume that this is already happening, if you looked left, way back in time. And what happens is, at the time that this low over here is broken by this price action over here and we get a break of structure, that then becomes a swing break of structure. So it's the same exact topic when we're marking smaller breaks of structure. So this also is a break of structure there. And then we also have a break of structure here, and so on and so forth, all the way back. I'll just go ahead and mark all these so that we can see. That's another break of structure there. Another one there. Another one there. And there. Okay. And so we do have smaller breaks of structure here, and price is breaking structure to facilitate a swing pullback. Okay. So this is the entire range right here is swing structure right here. Okay. And so on this time frame, and when you see something like this happening in the market, either way, whether it's for bearish or bullish price action, then at the time that this low right here is broken and a candle closes below that, using the same exact concepts that we've already learned for these smaller breaks of structure, we apply that to swing structure now. and we understand that this is now a swing range, okay? And so at this time, we would expect price to trade somewhere back up into this entire range that's formed, which on this chart, for example, is from this high all the way down to this low. So this entire range right here is the newly created swing range. And we then, in a pullback, can expect price to do the same thing. So we'll just say, for example, right here is the newly created lower low, and price starts to pull back, okay? And does the same thing again. Trades up, and then all of a sudden we get, well, get a change of character, break of structure, one more break of structure, and then this is getting pretty ugly. So yeah, this is a little bit messy. It's kind of driving me crazy. One second. So it looks something a little bit more like this. Okay, and forming swing structure again. And so we can see at this point in time, when this low is broken by the second that it's the same exact concepts as all these other little breaks of structure, the second that a candle closes below it, that then forms swing structure, okay? And so at this point in time, we can now see higher highs and higher lows forming in the market, and these now become our swing points of structure, okay? And it would be safe to assume that on this time frame that we're looking at, price is going to continue to do that until it doesn't, or until we learn how to apply the other topics that we're going to learn later on in the course to predict more accurately when price is going to reverse, okay? So this is kind of an introduction to swing structure, and we're probably going to do one or two more lessons after this one just to understand how all this works before moving to multi-time frame analysis.